Binod Modi, the portfolio manager at Sharekhan by PNB Paribas, on the results for Bajaj Finance. Now, let's just quickly take you through the results first. We do see a largely inline set of numbers. Revenues in line, PAT a slight bit of a beat coming in there. The operating profit is a slight miss according to ET Now estimates. We do see the PAT coming in at 3,824 crores on a year-on-year basis. The net interest income has increased by 28% in Q4 to 8,013 crore rupees. Also, the NII is up 28% on a year-on-year basis, and the calculated NII is, like I mentioned, is up 28% on a year-on-year basis. But the AUM is currently stands at 33,000. 3 lakhs. I beg your pardon. 3 lakhs, 30,000 rupees crores, up 34% on a year-on-year basis, and they have also announced a dividend of 36 rupees per share is what is coming in right now. But tell you what, we're joined by the guests, and let's go across to Binod Modi to get the first cut of the results. Hi Binod, welcome to ET Now. Bajaj Finance has just reported its number. Tell us, how are you reading into the numbers? What's the first cut?
I think numbers, the broad numbers, if I have not seen in detail, but broad numbers, apparently looks to be, quite in line what was been anticipated, right? So overall, the kind of, AUM growth that the 3.3 lakhs crore, that looks to be, very impressive, and the kind of traction that we have been seeing in overall, customer franchisee, number of customer franchisee of the company, that again looks to be, quite interesting and impressive. So I think in terms of, growth perspective, it looks to be quite good.
Right, Binod, tell us about the new loan books, because according to the recent update by the company, the new loan books during the quarter were lower on accounts of restrictions placed by the RBI on the company, on sanction and disbursal of loans under e-com and Insta EMI card. What is the picture likely going to be going forward for this one?
Yeah, that was already been anticipated, because we had already seen in the month of November last year, RBI had banned Insta EMI card as well as e-commerce transaction for the company. So that impact, the full impact would have come in this quarter. So that was I believe broadly been anticipated. But at the same time, the other headwinds which I'm finding about the company is the kind of the delinquencies that we have been seeing for last couple of quarters, especially from the B2C segment in urban as well as rural market. So that's a bit of concern to me. And at the same time, the kind of guidance that which companies are giving about credit cost, that's been almost 175 to 185 bips. That looks to be little bit higher side to me. So these are the some concern in terms of asset quality to me as of now. But however, as far as growth is concerned, I believe companies should continue to maintain around 20 to 25% kind of growth despite the RBI restrictions. So my view, overall view looks to be mixed in terms of growth. Looks to be good as of now, but asset quality concern to me, I believe it might be there going ahead.
So asset quality concerns could be there going ahead, Binod, but how are you expecting the markets to react tomorrow to the results? What can we expect?
I don't think so. Market will react, very positively. I believe it might be neutral and depends upon the con call, how the con call, comes out. But overall, for the long-term perspective, as we can say that the company might be seeing, very aggressive competition going ahead from the Geo. At the same time, the kind of valuation that it is getting still is trading over, 4.5 times of FY26 books. So if company might not be able to register, going ahead, and there should be any sort of threats coming in, delivering 30% sort of growth, I believe valuation contraction still might be on the card. But as of now, looking at the aggressiveness of the company, which company is focusing towards digital platform, and companies targeting almost 25% sort of overall volume from digital platform, which would also result in the efficiency gain as well as margin. So I think it's a bit there is lots of ifs and buts, I can say, but all in all, I believe overall growth perspective looks to be good as of now. But yes, premium valuation is still on the risk too. That's what I can say as of now.
All right, Binod, thank you so much for joining us. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.